This podcast is made possible by High Radius.
Hi, this is Bill Zarella. I'm the CFO of ACV Auctions, and you are listening to the CFO Thought Leader.
This is episode 814.
Even though a lot of that is now captured in Salesforce, it's very hard for a CFO just to look at the Salesforce numbers to know what will close and what will not close. And that's where using AI technology comes in very handy, because what the tool does is it looks at, let's say, Jack, and the number of interactions you've had with a particular account. And it's going to look at how frequently you're emailing the account, how frequently you're having conversations with them. Is that the right level of conversation? Who the economic buyer is? If all of that information is captured, I can have a probability-driven assessment of will I close that business or not. So I look at that daily and definitely weekly.
Hi, it's Jack. On today's episode, we speak with Manish Sarin, CFO of Sprinklr. Even after serving in multiple CFO roles and spending 10 years on Wall Street, Manish Sarin still marvels at the plus-size experience he acquired in the mid-1990s when he worked for Price Waterhouse as a financial advisor inside its Nairobi office in Kenya, East Africa. At the time, Sarin says, an abundance of available funding from the World Bank and IMF was enticing growing numbers of state-owned businesses in the region to privatize their operations as a prelude to jump-starting their capital market strategies. 20 years later, when Sarin was preparing to open his first CFO chapter, some of that early work undoubtedly came to mind as he sought to formulate a vision for the CFO role in the broader business context Wall Street and other stakeholders now expect 21st century finance leaders to deliver. Our talk with CFO Manish Sarin begins after this. Did you know more than 60% of B2B invoices are paid late? Well, then it should come as little surprise that the priorities of finance leaders have shifted towards accelerating cash recovery and scaling business growth. To address this issue, High Radius now connects your credit, billing and invoicing, cash application deductions, and collections into a single business process and empowers your finance team to champion your business's high-performance culture. More than 700 of the world's leading companies have transformed the office of their CFO with High Radius. Unlock working capital and reduce bad debt with the best AI-powered accounts receivable management software. To learn more, visit us at highradius.com. Hello, we're speaking with Manish Sarin, CFO of Sprinklr. Manish, welcome.
Well, thank you, Jack. Excited to be on the show.
So, someone might have clued you in that we always begin with this question. We have quite a few episodes that reveal it, I suppose. But we always begin by asking our guests to look back for us, Manish, and try to zero in on those experiences they feel really prepared them for this role that they have today. So what would those experiences be for you?
Yeah, that's a fascinating question. Definitely sort of takes me down memory lane. But look, I've had varied experiences over the years. I actually grew up in a fascinating part of the world in East Africa. And, that was just a very different environment. From there, I went ahead and did my undergrad in computer science and engineering. And, going through the engineering sort of degree, coming out, writing code, I sort of concluded very quickly that while I enjoyed tech, it was horribly boring to sit in front of a screen, write code all day. And I know I'm probably doing disservice to a vast segment of society that enjoys doing it. But it seemed to me that I would enjoy learning about tech, working in technology, but not necessarily be in the weeds of it. Uh, and that sort of took me down a slightly different path. I started looking around for companies that would allow me a foray into financial services. And I hit upon Price Waterhouse, which this was before their merger with Coopers and Lybrand. And they were, kind enough to take me as the junior most lackey on a team that really was involved in financial services advisory work. And you'd remember I said I grew up in East Africa. So my assignment at PwC was actually in Kenya. And I spent 4 years working with PwC consultants on a variety of privatization projects. So this is after the Berlin Wall had come down in 89. There was a lot of funding from the World Bank and the IMF to help privatize state-owned businesses, really jumpstart a capital markets process. So over the 4 years that I worked with them, I helped privatize state-owned businesses like steel mills, aluminum plants, car dealerships, tea estates, commercial banks. And for an engineer, there was a amazing entry into how businesses work, what makes them successful, what makes them not so successful. How do you actually start evaluating businesses from a capitalistic perspective? And those 4 years, I even look back today and say, probably the most fascinating learning experience of my life. And that sort of then led me to, I should probably go get a formal education in business. I came to the US and went to Columbia in New York. And again, you're sucked into the world of Wall Street. Sounds like that's where all the bright minds are. And this is 99 when I joined JP Morgan. Uh, they had then just acquired a technology boutique on the West Coast called Hambrecht and Quist, or H&Q. H&Q was one of the four horsemen at that time, really doing a lot of tech advisory work, IPOs and such. And so in 2000, I was moved out to the Bay Area, and I still live in the Bay Area today. And I found that whole experience in terms of how do you take an arcane or unique technology asset, how do you really break it down into sound bites? How do you then really excite the investment community that may not understand the technology per se? And I thought that experience was also really instrumental, particularly as I went down the path of becoming a tech CFO, really taking complex ideas and making it easy for the investing public to digest it. So I spent several years, first at JP Morgan, then at another firm called Merrill Lynch, before I then spent 6 years at a company called Proofpoint. And my Proofpoint journey was all around using first M&A as a strategic tool. I led the corporate development efforts there, ended up buying 20 businesses during my 6 years. So not just buying them, but integrating them, figuring out pricing models, go to market. That led me down the path of running FP&A and then investor relations, and then set me up for my first CFO role. The one before this was at a later stage private company, and then Sprinklr 3 months ago.
Wow, a wonderful overview for us. Thank you. Can I ask, I'm curious, that original Price Waterhouse that you stepped into, that office, describe it a little bit for us.
It was a smallish office. So the firm at that time was run out of Nairobi in Kenya, but managed East Africa. So the countries of Tanzania, Uganda, and Kenya. The office was probably, I'd say, maybe 100 people, but a lot of it was audit, which I was not a part of. And there was a smallish team of, call it 10 people that was doing this financial advisory, privatization work. So our client really was the World Bank and the IMF, but we would then go work at state-owned businesses at their request, prepare our analysis, and then present both to the World Bank as well as the national government.
Wanted to just touch on with you the economy, just because, again, you arrive in investment banking just in time for what would be the dot-com implosion. And of course, on the other end of your actual 10 years in investment banking, really, it looks like, of course, there was the downturn and all of what that meant for Wall Street. And any reflections on that, lessons, takeaways?
Yeah, I think that's a fantastic question, because business cycles will always be. In fact, we're probably going to entering one other pullback recession. We'll see what it ends up being. We've obviously gone through, a huge 10-year growth spurt in the economy. The reflection, quite honestly, is you won't see it coming, but there will be a black swan event. It was the housing market. Before that was the dot-com. During the dot-com bubble, it was very easy to justify, and people came up with valuation methodologies to justify why JDS Uniphase, I don't know if you remember that company, all around optical components, is worth 200 billion. And all they were doing was making optical components for fiber optic networks. Uh, so valuations will be created to justify what the market is saying, but a discerning investor will step back and say, well, this can't continue. And you obviously saw that even now, last couple of years, because of COVID, the market was awash in liquidity. You were seeing private companies with 10 million in revenues getting valued at $1 billion or more. To any rational investor, that would seem excessive. But from the perspective of people putting money in, they were able to raise money without any problem. Interest rates were close to zero. And when you have such a low bar, people are willing to take a lot of risk. And that has been true in the housing bubble, that's been true in the dot-com bust, and certainly was true over the last couple of years.
I want to then jump to as you went into industry, as you described for us the opportunity where you were 6 years at Proofpoint, and you wore multiple hats and you grew. It sounds like you grew into these other roles, as you mentioned, investor relations, FP&A. But when you leave Wall Street, were you thinking I should position myself as a corporate development executive? I mean, what was the idea? And I get the sense, as you mentioned, M&A. I'm going to be that person you hire because I can really evaluate your future merger targets and whether they're a good fit for this business. I mean, how are you thinking about the type of role you wanted to step into?
Yeah, so the harsh truth, I think, that a lot of people coming out of Wall Street realizes, even though they might be purveyors of high finance, at least that's the way they want to think about it, the actual world of running a company from a CFO's perspective, they have very little insights into. And so I thought I would have an easier entry into being a CFO down the road. But the moment I joined, I realized there were many things I didn't understand and I hadn't done before. So the easiest entry always seems like you can start with your strength, which is M&A, really parlay that into corporate development work at the company. What was unique at Proofpoint, though, was given so much, given that M&A played such a key role in what that company became, it opened many doors for me. And I hadn't really thought when I joined that I would end up running IR or FP&A, but those opportunities became available. And I've always jumped in and taken risk, and it seemed like I should go do it. I should expand my horizons, and one thing led to another. So it was from that perspective, a really phenomenal journey of just learning and self-development.
Let me ask you about that, because the investor relations piece, I would imagine, began to position you well for the eventual CFO role that you arrive in. And one of the milestones often we talk about is whether you stepped in front of the board for the first time. And, the light bulb went off there saying, Manish would be a great for investor relations. The way he just detailed all of that for us, he would be highly skilled in explaining this to the to the outside world as well as analysts take a closer look at the company or what have you. Is that what transpired or no? Is it different? You had from your investment banking years undoubtedly sat across from C-suite executives, so it's not like you hadn't had that type of exposure before. But I'm wondering if was there a memorable chapter at Proofpoint where you really had to go before the board or demonstrate how to illustrate something for a broader audience? Anything?
Proofpoint was when I joined them a small cap business. It was 400 million market cap, wasn't a very big business. They had just gone public. And it was sort of one of these, humdrum kind of IPOs. Like there wasn't much fanfare around the company. What added sizzle to the story was the M&A that we did over the next 2 years. And there wasn't an IR function at that time. So the CEO and CFO would actually go out and talk to investors. As the story became more and more around why we were doing this M&A, what did that do to our product portfolio? How are we adding more capabilities to the underlying product suite? Investors wanted to talk to who is the guy who is doing all of this. And that sort of allowed me an entry into, let me go explain why I'm doing this. And I would give a ton of credit to the CEO and CFO at that time, so Gary Steele and Paul Orwell. They were super comfortable putting me in front of investors. And it was sort of a natural evolution. And then eventually what happened is Paul Orwell, the CFO, and I would spend a ton of time with investors. And so that M&A story morphed into let's make this an IR role and then let's do other things around it.
Now you leave Proofpoint and step into a CFO role. And we also like to sort of highlight that segue, that connection. Was there, and we're up to Sprinklr really. We want to find out about Sprinklr and what the company does. But was there a recruiter then involved with your arrival there?
So for public company CFOs, I think for the most part, there always is a recruiter involved. I think the board wants to make sure they looked at enough candidates to sort of satisfy their fiduciary duties. So there was a recruiter involved, but I had interacted with some of the board members in the past. So there was some familiarity with me as an individual and my performance in prior companies. I'm not sure if that provided any real advantage or not, but there was a recruiter involved. And I went through the motion that you go through to get, a new role at a public company.
Now, looking back on your path, and I haven't asked this question before, but you did a very nice job for us giving us an overview, so it's easy for us to understand. I don't think you'd change or wish you spent less time at Price Waterhouse. I mean, I think you made that clear. That was a wise investment of time for you. Wall Street, you gave 10 years to, and then you mentioned 6 years at Proofpoint. Would you have spent more years any one place or less as you think of your trajectory?
You always leave Wall Street thinking you could have spent less time.
Yeah.
You certainly learn a lot. And when the world or when timing is good, you obviously get paid appropriately. But you always look back and say, at the end of the day, you were an intermediary. And I'd concluded long ago that I wanted to go be a principal, which is I wanted to be in a position where I was responsible for making decisions. I was comfortable taking that role. And as an advisor, there is only so much you can do. And, the timing was never right. It was bookended by the two recessions, as you said, the dot-com and the housing bust. And, Wall Street is very good at paying you just enough to keep you around. So you always try to balance the two, which is what's the right time to leave. But look, in hindsight, I learned a lot. I made some fantastic friends. It was a great experience all the way around.
Excellent. Well, thank you for that. So we are there. We have arrived at Sprinklr, and I get to ask you about this company. If you wouldn't mind, tell us about it. What does it do? What are its offerings?
Yeah, sure. Thank you. So Sprinklr, think of it as a enterprise software company that is looking to unify customer experiences. And that might seem esoteric, but let's take a step back. Any big brand today, from Nike to Coca-Cola, they're all looking to interact with their end customers. Historically, they would do that through print media, then they would do that through a radio or a television. More and more our interactions are digital. So companies have channels in a variety of social media, whether it's Instagram to Twitter to Facebook to what have you. And these can obviously change across geographies and across the various brands that these companies have. And they're looking to not just interact with end customers, but also do what's called sentiment analysis, which is listening to them. So think of it from the perspective of Nike. You're looking to introduce a new shoe. You want to understand, what does Jack think about this? And not just about this, how would this be perceived compared to a competitive offering from Adidas, as an example? So that's how the company started, all around customer experiences on social media. we've taken that to then grow and create workflow tools for marketing and advertising, all around, again, helping these brands get optimum value from their ad dollars. And then more recently, you can't really unify customer experiences without adding voice to it. So we are providing a single platform or a pane of glass, if you will, that allows these companies to interact with their customers using live chat, email, social, or voice. So I don't know if that captures it all for you, but think of it as one platform where you can interact with your customers no matter what medium you choose.
Can I ask, can you give us maybe a brief history of its capital structure? It's publicly held today,
It
but can
is.
you take us back in time?
I can. So the business was started 13 years ago by a gentleman named Raji Thomas. I think this was his second or third startup. So a lot of the initial funding was his own. He then raised money from uh, Battery Ventures. They were the original investors. There was then a Series B or C done with Iconic, a couple of other investors. And I'd say 3 years ago, we took our last slug of money pre-IPO from a growth investment firm called Hellman and Friedman, or H&F, and they own a significant portion of the company. And then we went public actually exactly 1 year ago. So it was July 23rd of last year, or June 23rd of last year.
So as you step into the role recently, what is the chapter that you're opening? You want to open, or you view yourself as, here's the chapter I'm going to help them architect. What would you tell us? What are you tasked with? It's about the growth, isn't it? Yeah.
It's about the growth. And obviously, so when we went public, the growth was a little anemic because the company had really pulled back during COVID. It had scale. So this year we'll do well over 600 million in revenues, but growth was a little bit anemic compared to a lot of other public companies that were, companies that were going public last year. And so the first order of business obviously was help the company really hit its stride from a growth perspective. So we've gone from 17, 18% growth when we went public to our most recent quarter where we are over 30%. So that has been order number one. The second order of business, quite honestly, is it's a little bit of a misunderstood story on Wall Street. So investors kind of still view us as largely a social media management company. And so there is an ask to go spend enough time with investors to educate them on how we are really changing the story. The business has gone from just dependent on social media to a variety of other products. So that would be order number two. And then, quite honestly, at this scale, we need to get to a free cash flow positive position. So one of the other things you'd hear investors really hone in on, it's this rule of thumb called Rule of 40. And the Rule of 40 is really looking at your growth rate and your free cash flow margin. And so we don't really look very good on the Rule of 40. And so we're working to put some operating discipline in the business so we start looking a lot better on that metric.
This is a company whose offerings are designed to help its customers deal with customers. And so I'm trying to understand how your finance function likewise has visibility into the customer, and how you're building a customer-centric finance function. And just given the nature of the company's offerings, one might suspect that you're maybe more advanced, more out in front in terms of how you bring customer intelligence into the organization and inform the business model. Would that be accurate? What would you tell us?
So in our tools, we've obviously built a ton of AI, and I know it's a buzzword these days, but it's all around taking billions of data points and creating an intelligence out of it. Even when we go to market, so we have our own tools that sit on top of Salesforce, as an example. As our reps put in information about their interactions with the customers, we're able to synthesize all of that into figuring out what's the likelihood of us closing a transaction, as an example. So we are using a lot of our own technology from that perspective. In our customer support teams, We are eating our own dog food. So we are applying our own tools. So it's a single pane of glass again, interacting with customers, be it on WeChat or WhatsApp or Twitter. So we're really looking to engage with accounts on a variety of medium. We're applying the same level of intelligence at the front of the sales process, the top of the funnel in terms of AI. So it is we try to use our own tools internally all the time, because at the end of the day, that's the best way to figure out how an end user would find what works and what doesn't. What do we need to fine tune? So we use it in customer support, we use it in marketing, our workflow tools for advertising spend, we use our same tools, and we obviously apply it at the top of the funnel in our go to market process. Does that sort of capture what you were looking for?
Spot on. Now, we were accustomed to asking this question about, okay, so what are the metrics? And I would just quickly make the assumption that it's unit economics and it's recurring revenues and customer churn. And these are things that you're keeping a close eye on. So I guess what I'd like to know is, well, what would surprise us if there's something you've discovered a business dynamic that you and have begun to measure more regularly. And maybe it's something other businesses measure, but you realized, given the nature of what Sprinklr does or how it closes business, you realized that it was far more revealing in this business. I don't know. But the blanket question would be, is there a business dynamic that you have begun measuring more closely, or you have decided a certain part of the organization needs to be educated about, that they need to pay attention to it more closely? So how have you created that visibility? Anyway, that's sort of what we're sort of drilling down on. And I'm sorry, I'm really wordy about it, but anything come to mind?
Yeah, many things actually. So back again to so let me talk about two things. One is at the revenue bookings billings level, and then I'll talk about on the cost level. Because CFOs, of course, worry about both things. So at the top line, as I was saying earlier, we apply a level of intelligence for all the transactions that we're looking to book in a quarter. I get visibility on a daily, weekly basis. How is our pipeline looking? How are our close rates moving? What business am I seeing? What is the likelihood of me closing a particular piece of business this quarter? So if I go back a couple of decades, this used to be verbal conversations between the CFO and the head of sales. And the CFO would constantly be pestering the head of sales. How much would I do this quarter? How should I guide Wall Street? And you'd have to make your own gut check on what you would need from a guidance perspective. But you're obviously completely reliant on information given to you by the sales team. Even though a lot of that is now captured in Salesforce, it's very hard for a CFO just to look at the Salesforce numbers to know what will close and what will not close. And that's where using AI technology comes in very handy, because what the tool does is it looks at, let's say, Jack, and the number of interactions you've had with a particular account. And it's going to look at how frequently you're emailing the account, how frequently you're having conversations with them. Is that the right level of conversation? Who the economic buyer is? If all of that information is captured, I can have a probability driven assessment of will I close that business or not. So I look at that daily and definitely weekly. So that gives me a good sense for close rates. You mentioned churn. That normally is a forward looking indicator of if you're going to enter into a recession, would existing accounts pull back on renewals, or maybe renew for a lower amount or reduce the number of seats. So I'm maniacally focused at what's called gross retention, which is existing clients. How are we doing in terms of renewing their business? And the third thing, back down to the cost side, I mean, for software companies, almost 80% of your cost is people. And everybody says people are the biggest asset, which is true. But in times like this, you want to get a good handle on your cost in any quarter. So we use tools like Greenhouse and obviously a bunch of other things that are connected to our Workday instance. And I'm looking weekly on the number of job openings that we have, the offers that have gone out, the people that have accepted those offers to get a good sense for where will my headcount land at the end of the quarter. So does that capture both
Absolutely.
sides?
Absolutely. As people like yourself and finance leadership takes a closer look at that sort of talent funnel, let's call it, in bringing your mindset to it, have you said, it's kind of silly how we do this, or are there any, and again, you might feel like, well, I have to be a little more diplomatic than that, and have to better understand how the process works. But no, I mean, as more finance leaders take a close look at it, does it function the way it should? This piece of the funnel is really inefficient. Why don't we do this differently? Have you had any bigger thoughts about why the talent funnel how it could be optimized?
Probably not at the level where I could provide any, blinding insights, but you are correct in your assessment that that whole recruiting process is broken. There is a mishmash of tools. At the end of the day, the information is not widely disseminated. The recruiters obviously have a rec that they work on, and so they're out calling prospective candidates. That feedback loop, not just capturing that information in a tool, but then making its way through the hiring manager, then to the approval process, then back again to the candidate. It's a hodgepodge of things with a lot of handoffs and different tools. And there isn't one tool that captures it all. And I think that probably is what you're looking at. We capture a lot of employee information in Workday, but then have a different set of tools for recruiters, have a different set of tools for capturing information from candidates, none of which makes its way through the finance function. So there is a manual finance function that approves things. So not very elegant. I don't have a way to solve it today other than just try to, you know, uh, just try to get my arms around the way it is right now. As we work through the three initiatives that I'd said earlier, we might go back and take a look at it, but it is definitely something that's a little bit more manual than what I would like.
Excellent. Well, thank you for that. The other question I'd love to have you ask you is regarding to FP&A. I mean, having come up, having been rooted in the FP&A department and come up the ranks, do you have a bias? Is there something you like to structure differently, perhaps, or maybe you find your FP&A talent differently, or maybe you've embedded them a little more freely than other CFOs? When it comes to FP&A, any innovations, or no, you're using a very traditional approach?
No, so what I would first make a remark is I find people in FP&A are really integral to making the finance function successful. And maybe I'm biased, but I tend to really staff it with a lot of Wall Street talent type, like people who are good at financial modeling. The tools have obviously improved a lot, so we're not entirely reliant on Excel anymore. We use, a variety of tools like Adaptive and others. What is very important for me is making sure that the FP&A team is entrenched in various parts of the organization. So I have dedicated teams that work with sales and sales operations, dedicated teams that work with the product teams, dedicated teams that work with G&A functions. And the reason I do that is your typical accounting team is all around closing the books and making sure there is hygiene there, but they don't have the visibility into what's happening in these various other departments. And so what I tend to do is have these FP&A mini teams, if you will, entrenched, and then have that information disseminated through the accounting team so there is proper controls in the company. I don't know if that's traditional or not, but it's all around using one tool to capture information and make sure my FP&A team is entrenched to make sure I know what's going on in those departments.
Excellent. Thank you for the detail there. That's interesting for us. We are up to what we refer to as our finance strategic moment question, Manish, and this is where we just ask you to pluck one experience out of your long career and share a story that reveals how finance plays a strategic role in business. Again, your lines of sight into the organization are unique and see things that others can't. what would you share with us as a finance strategic moment?
Yeah, that's a terrific question. So I don't know if we captured it in the conversation we've had, but I've always felt there is a couple of things that a new CFO, not a new, but a modern or tech focused CFO needs to be really good at. And the first is the ability to influence. If you think about it, CFOs, it's a very empowering role. And if a CFO approaches that role from the perspective of, I have this finance swim lane, I think that's a very narrow view of the role. It has to be much broader, where you basically say the entire company and what's happening in every department is part of my remit. And it then gets challenging as you're trying to then influence a head of sales or a head of product, because there is no real reason for them to really agree with what you're saying. But it's very important for the CFO to have a view in each one of those departments to then not just understand what's going on, but then articulate that story to Wall Street and just have a much broader view of the business. So my real learning moment here happened, I'd say maybe 4 or 5 years ago. And given that I came from the tech world and I knew how to sort of paraphrase things or have sound bites for Wall Street, I would never, however, give enough context to the people that I was dealing with in my peer group. And I remember a few years ago, a head of sales told me that you have great ideas, Manish, but you need to provide a lot of context. Why are you doing the things that you're doing? And I think that's very important for younger CFOs to really understand that people will come along with you if you provide them enough background on why you're doing what you're doing. And I've always taken that advice to heart, which is be prescriptive, walk people through your thinking, make sure you convince them without using the power that comes with that role. So let it be a light touch way. As long as you provide enough context, you would actually get people to agree with you.
It's Jack, and I hope you're enjoying our interview with CFO. I think he just provided a fabulous takeaway, which is how CFOs really need to provide greater context. And as our listeners know, we've commented here before about the importance of a CFO having a professional narrative that can be shared widely and digested widely. Like never before, CFOs have to explain themselves in different situations with different stakeholders. So remember, context matters, especially when you're speaking to others outside the realm of finance. One great takeaway from CFO Sarin. We now return to our interview. Thank you for listening. Hello, we've entered the mentoring round with CFO Manish Sarin. We always begin with this question. We'd like to know the first time, if you can think back, the first 60 days, the first 90 days you were in a CFO role. If you could go back and give yourself a piece of advice, and again, this is really a leadership question. It's when you assumed all that responsibility on your shoulders for the first time. What is it that you would tell yourself now that you've done it multiple times? What is it that you would tell yourself at the start of that CFO journey?
That's a very good question, and I'm not sure there is a pithy answer to it. But if I could say, the one thing that first time CFOs should get comfortable with, and I wish somebody would have told me, is don't be afraid to break glass. CFOs earn their stripes and they earn their respect when people look at them and say, he or she is capable of making a hard decision. And a lot of that obviously comes from, you'll have to cajole people into agreeing with you. You might have to, bully a few people. But the ability to break glass and stand by your convictions, it takes a little bit of effort. And when you're new in a role, everybody obviously tries very hard that I need to get along with my peers. I can't be construed as somebody who is, not a team player. And we all work in teams. We're all judged on a 360 level. And it's hard at times because you need to take a stance that might not be very popular, but it's the right thing for the company.
We always like to ask our guests to reflect a little on the personal side for us. And we're wondering if you have a personal habit or part of a daily routine. And I always try to emphasize this. This is something you're known for over time. This is something people will, oh, that's just Manish. They know you for this. It's something more a family member might be able to identify more quickly for us. But anything come to mind as far as a personal habit or part of a routine that you're
Yeah,
known
so
for?
I think as we get sucked into hundreds of things during a day, it's hard to sort of keep track of what you need to do, what you've asked somebody to do, what you need to do later. And I have a very rudimentary way of tracking things, but I read this in an interview that Jamie Dimon gave once, that he would carry around a piece of paper in his pocket. On one side are things that he owes somebody. On the other side of the paper are things that people owe him for that day. And so what I've ended up doing is I have a notebook, and every day I write in it on two sides the things that I need to do today and the things that people need to do for me today. And I find it's rudimentary, it's basic, it's pen and paper, but it keeps me organized all the time. And so my family jokes about it. I have a little notebook. The notebook basically says, "You can't touch this." That's the heading on the notebook. And inside it's by day. Everything's organized.
Nice. Now, do you have a book recommendation for us? We always like to ask for one.
Yeah, I do. And in fact, it's a book that I read recently. It's called Leaders Eat Last. And it's by a gentleman named Simon Sinek. And the book is all around leadership traits, all the way from, SEAL teams, from the Navy to, business leaders. And I think it's very important for CFOs to read it too, because it provides a level of, forget the financial acumen, analytical skills aside for a minute, back again to how do you influence people? How do you get them to agree with you? And it provides leadership traits that I think is super important, of course, for everybody, but I think particularly important for CFOs.
I wanted to circle back to Jamie Dimon's approach there for a second. Have you found one side of the page is easier for you to knock off during the course of a day than the other side? And on the other side, where the items are owed you, are the suppliers of those items, are they nervous? Is it a good place to be on the paper?
No, I'm look, I've realized long ago, unless I deliver for people, they wouldn't deliver for me. So I go out of my way to make sure people feel that they can come to me and I will give them an honest, transparent answer. And if I don't know it, I will go work on it and come back to them.
Excellent. So, by example, we are up to our final question, which is to ask you to look in the future for us. We're wondering over the next 12 months what your CFO priorities are for Sprinklr. What would those be, your CFO priorities?
Yeah, so I've gone on record in my last couple of earnings calls, but also to really say we need to get a little bit more operational rigor and discipline in the business. The company has grown phenomenally over the last many years. We have a marquee position in the market. We are recognized as such by independent research firms. But I think we're at a time, a lot of it obviously dictated by current macro conditions, where we need to be a lot more disciplined in how we do business. And so that obviously is my first priority. And then second priority, as I was saying earlier, is really trying to distill the story down for investors. We have a lot of great assets. The products are phenomenal, but I don't think that story is well understood. And so I'll be spending a lot of time in public forums, in presentations, on panels, trying to disseminate the story to the investing public.
Manish Sarin, thank you for joining us on CFO Thought Leader.
Thank you very much, Jack. Really appreciate the time and the opportunity.
Hello, listeners. Do us a favor. Be certain to subscribe to CFO Thought Leader on Apple Podcasts, or if you're an Android user, check us out on Spotify or Google Play. If you liked the show, please recommend it to a friend.